Trump's tax plan versus Biden's tax plan. In this video, we're going to break down each of the plans and which tax plan costs more money for you, all in plain words and easy to understand fashion. Hey, what's going on, guys? It's Sam Kwok here, one of the Kwok Brothers, and election is just coming around the corner. And being that our YouTube channel covers many of the financial concepts, we wanted to take the opportunity to break down each of the top presidential candidates' plans for taxes. But before we do that, be sure to subscribe to our channel and hit the bell notification button to learn more about personal finances, real estate investing, and making more money. Now, I'm going to do this with the best of my ability to leave any politics out of this video and give you the straight facts as is. I know this is a sensitive topic, so we're gonna do our best to try to leave any politics out. But being that this is a breakdown video of each of the presidential candidates' plans for taxes, I will interject and add my commentary on its effects on the economy, small businesses, and of course, your personal finance. So the incumbent president, Donald Trump, has already introduced this tax plan called Tax Cuts and Jobs Act into law on December 22nd, 2017. Now, this law lowered the rate on nearly every bracket and increased the standard deduction of $6,350 per individual to $12,000. This ultimately means that you can claim a larger deduction from your taxable income, which means fewer taxes for everybody. But he does plan on introducing new plans on his next term if he were to get elected. But before we break down President Trump's tax plan any further, let's go and take a look at former Vice President Joe Biden's plan on taxes if he would be elected as a president. Now, I do want to credit the source to taxfoundation.org for providing the bullet point summary of each of the presidential candidates' tax plans. The link to that will be down below in the video description. So what I'm going to do now is I'm going to share my screen and share Vice President Joe Biden's tax plan if he were to get elected as president of 2020. So here is Tax Foundation. Again, I want to thank Tax Foundation for this amazing summary. And I'm going to go and cover key things, not all of everything, because we will be here for hours on end if we try to analyze everything. But I went and highlighted a couple things here as far as what matters to personal finance, small business, real estate investing, as well as, of course, your bottom line, your wallet. So key findings, and one thing that I highlight, which is actually right out of the gate, very interesting, is that according to Tax Foundation's general equilibrium model, the Biden tax plan will reduce GDP by 1.47% over the long term. This is very interesting. And again, I'm not commenting on this, whether this is good or bad. Obviously, this will slow down the economy, but this is a summary, and this is not my analysis, guys. This is the analysis from taxfoundation.org. Now, on page 2 of this report, Biden's tax plan includes the following payroll tax and individual income tax changes. This is not for businesses, this is for average people out there watching this video. Now, the very first thing I want to highlight on this page is that Biden wants to impose a 12.4% old age survival and disability insurance, this is basically Social Security, payroll tax on income earned above $400,000. So the magic number throughout this video C is be $400,000. So if you're making $400,000 a year or more, anything you earn above $400,000 will now be subjugated to larger taxes according to Biden's plan. The second thing is he's going to revert the top individual income tax rate for taxable income above $400,000 from 37%, which is currently what's happening right now, and he's going to increase it back up to 39.6%, which is prior to 2017's numbers. So it's going to go from 37% to 39.6% for any dollar earned more than $400,000. Moving along, again, I'm just going to highlight some key things. I don't want to highlight everything here. It's going to take forever, and I'm going to have to sit in this chair for a long time. So it says for 2021, and as long as the economic conditions require, increase the child tax credit, the CTC, from maximum value of $2,000 to $3,000 for children 17 or younger, while providing a $600 bonus credit for children under 6. So what this means that if you have kids that are under the age of 17, instead of getting a $2,000 child tax credit, you will now get $3,000 child tax credit per child. So if you have 3 children between the age of 6 through 17, you'll have basically $9,000 worth of tax credit that'll be owed to you. This is obviously more money in your pockets if you have children under the new Biden's tax plan. So that's for the child tax credit. Moving along, Biden also wants to propose a home buyer's credit, provide up to $15,000 for first-time home buyers. This is obviously to incentivize home ownership and allow more people to buy homes. Now, let's go ahead and transition over to business tax changes. I know a lot of my YouTube channel folks, you guys are landlords, you guys are in real estate, you guys want to start your business, or you may already have a business already. Now, right out of the gate, Biden wants to increase the corporate income tax from 21% to 28%. Now, keep in mind, folks, prior to 2017, that number was 35%. It was one of the highest corporate tax rate pretty much across the world. So in 2017, December 22nd, Donald Trump took the corporate tax rate from 35% down to 21%. Now Biden wants to increase that to 28%, kind of like a happy medium between 35 and 21. Additionally, this is for corporations that earn more than $100 million or higher. Biden proposes that corporations will pay the greater of their regular corporate income tax or the 15% minimum tax while still allowing for net operating loss and foreign tax credit. So this is for businesses that are making more than $100 million, employers such as Walmart, Target, Amazon. Now moving along, Biden also wants to offer tax credits to small businesses for adopting workplace retirement savings plans. So basically what this is that government gives small businesses money essentially to open a retirement savings account for their employees so that obviously it helps out their employees when it comes to retirement. Again, you guys can go and read this on your own. I'm just breaking down the key things that matter quite a bit and makes quite a bit of impact in your finances and your business. Now, moving along to the next page, this is probably the most important provision in Biden's tax plan when it comes to real estate investing. It says he wants to eliminate certain real estate industry tax provision. Well, what does this mean? Well, this also means that, according to some sources, that Biden wants to eliminate the 1031 security exchange. What this basically means is that if I sell my real estate today and I go in and basically transfer and trade for another real estate, so I sell one building and buy another building, with the 1031 security exchange rule, I can defer and carry forward any taxes that I would pay to the next building. Therefore, I don't have to pay taxes right away. It just simply defers, it gets postponed until the next building is sold or until I stop trading and ultimately I sell. And this has been one of the greatest tax incentives for real estate investors probably for the last half a century to help more real estate transactions and activities to continue. Well, Biden wants to get rid of that and eliminate the 1031 securities exchange, which actually would not be a good thing for real estate investing provision. Also, expanding the Affordable Cares Act premium tax credit. Well, this doesn't say exclusively, hey, we're going to bring back the Affordable Care Act. It assumes that Biden does want to bring back the Affordable Care Act, which is, aka the Obamacare. Of course, you guys know that the goal of the Affordable Care Act is, of course, provide a universal health care, or at least take a step towards what looks like a universal health care to all Americans. The next item is creating a refundable renter's tax credit capped at $5 billion per year, aimed at holding rent and utility payments at 30% of monthly income. Now, my interpretation of this is if you're a tenant making $3,000 a month, then this legal provision will pretty much make it so that you only have to pay up to $1,000 of your monthly income towards rent. Again, kind of like rent control, but could be in a bit of a harsher way for the landlord. So that's another item that's major when it comes to real estate investing industry. If you're a real estate investor, these are obviously bad news for you. Now, scrolling down, here comes economic impact. This is basically a summary of Biden's tax plan and how it may impact the economy overall. The GDP, again, I set this towards the earlier part of my summary here. We would see a long-term GDP loss of 1.47%. When it comes to capital stock, we may see a decrease of 2.54%. Now, capital stock is basically overall wealth of the businesses and operating companies. So we may see a decrease in overall wealth. Wage rate. Now, this is something that we all care about, right? We all want to get paid more. Well, according to taxfoundation.org, we may experience a negative 1.04% when it comes to our wages. So wages may come down under Biden's tax plan. Full-time equivalent jobs, so basically this means that any jobs that would be considered full-time, we may see a drop of 517,800 jobs overall. So overall, this is not my analysis, guys. This is Tax Foundation General Equilibrium model according to January 2020 number. Now, yes, this is a little bit outdated. I get that. There's gonna be some updated provisions in here. Now, so overall, not a good thing to the economy. GDP drops, capital stock drops, wage drops. This is for everybody, not just for the rich, not just for the poor, but this is a overall general economic prediction as to what would happen if Biden were to become president. Now, I'm not taking sides here, guys. This is just straight from taxfoundation.org. I'm just reading what the summary might be. But you guys can go through this on your own, kind of read it. I highly encourage you guys to do the research on your own. Don't just read the headlines. Don't just take it from me. I'm not the tax professional here. So I highly encourage you guys to go read this on your own and draw up on your own conclusion. Maybe there's some flaws when it comes to the data points. Maybe you agree. I don't know. What do you guys think? Go and comment down below. We'd love to hear what your guys' thoughts are. And I'm always making videos based on what you guys want to see, what you guys want to hear. And I'll tell you guys the truth when it matters, right? So you guys can go read this on your own, totally up to you, but you never know. This might be Vice President Biden's way of campaigning and trying to usher up some support. Who knows? Again, comment down your thoughts. Let me know what you think. Okay, so let's transition and talk about President Trump and what he would like to do for the America's tax plan if he would be reelected for the second term. Now, keep in mind, guys, that President Trump already passed a tax reform back in 2017, which I alluded to a couple of times, and that law is being enforced, so we don't have a whole lot of things to cover when it comes to making a direct comparison to the existing plan versus what Biden wants to do. But President Trump does have a couple of new ideas for his second term. One, President Trump is calling for the forgiveness of deferred payroll taxes that went in effect starting September 1st, 2020 through December 31st, 2020. Your payroll taxes are about 7.35%. So for every $1,000 you get paid, about $73.50 of that taxes you would have paid for are being postponed, meaning that your paycheck goes up temporarily, but with the current plan, that $73.50 needs to get paid back next year for the 2021 tax season. However, President Trump wants to pass a law that would essentially forgive the payroll taxes so that you don't have to pay it back next year. Number two, President Trump wants to lower the capital gains taxes from 20% down to 15%. Now, capital gains are often a term used for investment activities. Let's say you buy a piece of stock for $100, and next year the same piece of stock goes up to $150 and you decide you want to sell. Now, as a consequence of selling, you now owe taxes on the $50 profit you generated. Currently, you would pay about 20% tax on that $50, but President Trump wants to lower that 20% down to 15% so that you don't owe as much of tax. Now, this will definitely motivate more individuals to invest and create individual wealth. This also causes more frequent investment transactions since there are fewer penalties in selling an asset. Number three, this is a bit unclear and there's not an exact detail on this agenda, but President Trump did mention that he will focus on cutting taxes on the middle class tax brackets. And again, there's no specific provision, so this could easily be said and might not happen, and this just might be a campaign thing, so who knows? So you can see that there's pretty stark contrast between two presidential candidates as far as their philosophy of economy and taxation. Biden wants to essentially raise the taxes on wealthy and businesses, subsequently using the tax dollars to fund tax credits and programs for the less wealthy. Trump already made tax cuts on nearly all brackets and wants to continue tax cuts and having the government spend less money in general. Now, this is a classic big government versus small government debate. But I will say, as a business owner myself, and I'll just give you my opinion on this, that taxing employers, businesses, actually decreases the employer's ability to grow and thus create more jobs. It actually shrinks your tax bases, meaning you'll have fewer jobs being created by employers, thus fewer people actually paying the taxes. Now, guys, do I ultimately care about helping the poor and the less fortunate? Yes, absolutely. But personally, I would rather see the wealthy voluntarily give, help and aid the less fortunate from the place of giving heart, not from a forceful mandate at a gunpoint. And that goes to say we need more generosity in the world. And I always like to say, the more you give, the more you receive. And with that fact, go ahead and give us a like if you guys enjoyed this video, if you guys loved what we did. So that's pretty much the comparison, folks. Now, we're coming out with videos that ask these two questions. What would happen to the housing market if Joe Biden wins? And vice versa, what would happen to the housing market if Donald Trump wins? If you guys want to see those two predictions in our upcoming video, stay tuned and subscribe to our channel and check out some of the other videos that you might enjoy and be interested in. So with that being said, I'll see you guys in the next video.